Yeah, we're live, man. We are live in the group, I believe.
We are here again.
Yeah.
How are you, buddy?
I'm doing well, man. You know, I am grateful. Oh, and we got 11 participants on the call. Let's see who we got in here. I'm doing good, man. I am grateful that I'm in a good financial position to make it through whatever I got to make it through here. I have a business that's kind of work remote and be able to serve customers that are trying to build their brand online. So it kind of makes sense to double down in it right now. So I'm happy that my wife is home and we get to eat lunch every day and cook dinner every day. How about you, man? How are you feeling?
You know, overwhelmingly blessed. You know, I think really over the last few days, you know, just the full understanding of what this is meaning has really landed on me, as I think the rest of the world. And, you know, in the midst of all of this, I just keep going back to thinking how blessed we are, how blessed, you know, most of the people on this call are, because people out there are really hurting. People are really getting sick. And I think about those folks. I think about, you know, if I think more about JWB, I feel like we're really blessed because, you know, every business is going to, you know, be hurting at some point here. But, you know, we're really well positioned to handle this. And there are not a lot of companies that are as well positioned. And I feel for a lot of those folks that are having to make very difficult decisions to lay off people or not lay off people. I hope that they think long-term rather than short-term. But for JWB, we're in a really healthy position and we can withstand a change like this. And so, yeah, my heart goes out to those folks that are not in as well of a position. It's kind of how I'm feeling.
All right, man. Yeah, I think it's a very, very human thing to feel right now. So I want to get into a little bit of mechanics of what we're doing here, since it's a little bit different than what we've been doing in the past. Mm-hmm. Everybody that's joining us on the Zoom on the Zoom call, welcome. We got 14 attendees: Cecile, Christopher, David, Ari, Fetty, Feed, Hap, Jeff, Jeremy, Joseph, Lauren, Pam, Seth, Wenke, and Zach. Thank you. Welcome all of you to the call. Thank you for joining us. As you may or may not know, on Zoom, when you're in a webinar, there's a couple of different features. There's the chat version. If you want to tell us something in private, you can just say it just to the panelists, or you can make a drop-down menu and say it to somebody in specific. Or if you want to ask a question that you want answered live on air, there is the Q&A button. You hit that Q&A, you can pop in a question. It's going to populate for us, and I can keep track of it very well there. So if you have a question that you want answered, go ahead and put that in the Q&A. If that's too difficult, put it in the chat. That's fine. If you are on Facebook Live, and we have 6 people on Facebook Live with us also, feel free to join us in the Zoom link, or I'm tracking the Facebook Live as well. So if you pop in a question in there, I'll be able to ask it. Just know that on Facebook Live, there's like an 8-second delay. So I'll get your question a little bit after the fact, but we're tracking all of it. And without further ado, you know, I wish that I could say this is the best one ever, man, but it's pretty somber times. I thought that the show with Oliver was really, really interesting about the future of downtown and how he's been affecting anything. We're going to get into the coronavirus, and that's really going to be the meat of this call, I presume, because people are worried out there. Gregg has been, you know, tirelessly working on this stuff and developing a well-formulated, you know, perspective on what's going on. So we're going to get into that without further ado. But Gregg, I don't know, you want to say anything about kind of the Oliver show real quick? Or you want to go straight into it?
You know, that show there are so many key takeaways from there. I think one of the best things, though, is it allowed me to watch and to think about where my mind was when I was recording that episode, right? And it took me away from everything else that's going on. I think that's really important for people today. You know, you can't just watch the news for 3 hours at night, just nonstop. It's not healthy. You know, we need to get our news, but you also need to have a break. And so watching that, I know there's a number of key takeaways. I know that won't be the focus of our call today, but it was great for those key takeaways. Oliver's a dynamic leader at Jacksonville, but it helped me get perspective that's how I was feeling when that was recorded, right? And that's how I will feel once this uncertainty that is really gripping the world right now is over, right? Because there will be an end, and there will be an end to the uncertainty. This is a temporary thing that none of us planned or expected, but temporary is what it is. We can all agree that it is going to be temporary. And, I think about other crises that we've been through. I was firmly beginning to build my business in real estate in 2006 and 2007, which is the absolute wrong time to start building a real estate business. And I endured the 2008 real estate crash and the financial crash that we had there. And I just want people to understand that this is different than what we had there. We are going into a recession. I think most can agree there. I don't know how you could possibly not agree with that. But this is different. What we were facing in 2008 was a systemic problem. It was caused by real estate. And what we're facing now is a temporary thing. It is a virus. It is something that the underlying economy that we have and the underlying real estate market that we have is strong if you look at the metrics and the fundamentals. And so once we rally together to solve this, this is going to be a temporary thing, and we're going to recover, I think, much, much quicker than we have in the past. And if you think even broader than that, as a country and as a society, we have faced much bigger challenges than we're facing right now. We have the tools to be able to overcome this in a much better fashion. So I want people to have that perspective, to keep reminding yourselves of that while this is incredibly uncertain and this is a very terrible thing that we're experiencing right now, that this is temporary. And that's really, really important, especially as we make this transition into talking about your investments, which is, that's my job is to help you guys and where you're going to put your hard-earned money. Understanding that it's temporary and understanding that we need to think for the long haul is really important for you to make the best decisions for you and your family right now. Hey, Pablo, I think I lost you for the sound.
I had muted my microphone so I didn't mess up. This microphone's like really sensitive, so I didn't want to make like tapping noises or have people.
I thought I left you speechless there, bud.
You didn't. You tend to do. So I agree, man. Like this is clearly something that there's two sides of it, right? There's the fact that this doesn't have to do, and it both are both sides of the same coin, right? Like this doesn't have to do with the real estate market. The 2008 crash was of the real estate market, right? So it's going to perform in real estate differently than anything else has. And then there's the other side is like, this is something we really can't control, right? There's really nothing you can control except for abiding by the guidelines of the pandemic and isolating yourself, making sure everything blows over as much as possible, going through the personal pain that you can endure so that the herd can take care of itself. And once it comes back, then all the wheel should start turning again immediately, because there is no more fear of that thing happening, or right. And we can all see a good perspective. So I really value your opinion on that. And we already have a question if you want to hop right into it, man. Doug Orr asked in this inside the Facebook group. Doug, welcome. Good to see you, buddy. Do you see a drop in the price of the properties that you offer, or is the quantitative easing going to raise the price, if only momentarily?
I think it's a great question. Why don't we go through kind of step by step how I feel about that question specifically? But I think it's great to go through it in a broader perspective. I think today we're going to talk about rental properties, how they fare based on what we're seeing over the next 2 months. We're going to talk about rental income. We're going to talk about that type of a yield. And then I know that we're going to talk about home prices as well. But I think let's go through that. And I think a lot of the questions that we have there will be answered. I think, first and foremost, a lot of people are asking about JWB's team. So I want to kind of just explain what we're doing with the team so that everybody knows that we are fully committed to performing for our clients. And then why don't we go into maybe comparing rental properties, even comparing to what's going on in the broader market of investments and where that place fits for rental properties in your portfolio and why you make one decision versus the other. And then I think we go to rents. I think we go to prices. Is that okay?
I think that's a great idea, man. That's it. You have some very well formulated ways of framing this thing that I know we've talked about it. So why don't you go into that, right? Like, why don't you talk about Okay, so
Let's start
first
with
of
the
all,
team.
a couple weeks ago, you were going to go to, like last week, you were going to go to a couple of employees working from home to test the market, and now you are fully remote,
Yeah.
right? So why don't you talk procedurally first, what you're implementing?
Yeah. So last Wednesday, man, it seems like it was an entire year, but it was only 1 week ago. Last Wednesday, before the full brunt of this was hitting, we started to put plans in place for our team to work remote. The original intention was for our team to be fully ready to go remote for this next Monday coming up. We wanted to be fully operational. We were going to use this week to test that out to make sure that we were fully ready to go. So the good thing is that we had planned to be ready on that Monday. All of the IT requirements were done the previous 2 Fridays. So we started on Wednesday a week ago. Then by Friday of last week, we were ready to go IT wise. What we missed was the week of training, the week of testing to go remote. So we feel really good about our response to be able to serve clients for all things IT, to be able to perform remotely. We've got all of our 80 plus teammates are working remotely now. We have, a great team, and I don't see any disruption to the service that we're going to be able to provide for our team. We really are looking at this as an opportunity for us to underpromise and overdeliver and really wow people and show people how much we value them depending on us in a time like this. We want to be as open and communicative as possible. That's why you guys are probably going to get tired of me talking and in an outlet like this, because I want to be there in front of our clients, our people that depend on us, even if I don't know the answers. I'm going to give you everything that I've got, which are some answers and some unknowns. But the whole team is there. We made the decision to be able to work remote until April 15th as of this point in time. We're sort of following what Duval County Public Schools has laid out. And so they've said no school until April 15th. So that's what JWB is doing. And it's all system go. Our team is, I think, really using this as a rallying point to show the best of what we can do for our clients.
Got it. So now let's talk about let's talk about the viewpoint from an investor standpoint, right? Like how is this affecting your average investor? As an investor, how should you be looking at this thing right now?
So I think of it broad first. I think about where people are putting their money, what are investments overall doing, and then where does rental properties fit in with the overall perspective. So I looked up and looked at what the Dow was. On February 12th of this year, we hit an all-time high for the Dow Jones Industrial Average of 29,550. As of this morning, I pulled the stats and we're at 19,900. That is a 32% drop in a month. An incredible amount of volatility. I don't believe we've ever seen that much volatility in the stock market. That is really hurting people. Stocks, bonds, oil prices, gold, silver, even CDs and bank rates are all down right now. And people are scared. They're taking their money. A lot of people are putting it into cash right now because people are scared, and there's a paralysis right now, which I think is understandable. People don't know, and so they're hoarding their cash, and it's really hurting a lot of asset classes out there. They're very, very affected by this. And the other thing to keep in mind is how long it's going to take those other asset classes to recoup those losses. I mean, it's going to be years for those other asset classes to recoup those losses. So I think in a time like this, when you're deciding about what to do with your investments, you need to think about the perspective that this is temporary, and you need to think about this for the long haul. And I'm trying to separate, the reality that we all very much feel for those who are sick out there, and businesses that are hurting and people that are hurting. I'm trying to separate it now, and hopefully everybody understands that. I think, economics and investments pale in comparison to the human effect. But if we're just looking at how you can win from an investment perspective, there's not a better time to take a long-term outlook with your investments and make those types of decisions.
Okay. So now let's talk about the actual income side of things. Can you kind of break down the math around the dollars and cents on a short-term perspective?
So yeah, so now let's go to rental properties. So rental properties is known to be a consistent asset class. That's why people have been coming here forever. It's because the consistency of rental income is what attracts people to this asset class, as well as home prices. Let's first focus on rental income, okay? So are your residents going to be able to pay rent in this uncertain time? We don't know. We don't know exactly where this is going to land. And that is just the truth. There are so many factors right now that are changing hands that in the immediate short run, I don't have a good answer for you. I hope you all can kind of relate to that. But what I do feel very confident projecting is that there will be a temporary loss of rental income, right? I mean, people are unfortunately being laid off. If they're not being laid off, they're not working if they're hourly workers, and that means less money to pay for rent. That's what I know right now. What I also know is that the government is putting a huge effort to put the stimulus package to go through. And the aim of that stimulus package is to put money in those people's hands so that they can pay rent, so that they can pay their mortgage, so they don't lose their homes, and so that businesses can keep this workforce. I think what is really important for people to know is that because this is temporary, right, we need our small businesses to stay in business, and we need our small businesses to employ those people. And that's why you're seeing a lot of stimulus money being projected and expected to go through, because if you let small business fire people, then it's going to extend this recovery to be a lot longer, right? If you can just keep people here and be able to pay their employees for 2 months, 3 months, however many months, then you're going to keep the engine running and you can turn it right back on. And that's where a lot of this money is coming. So I am very hopeful that the stimulus package is going to help tremendously. I just don't know what it is, and I don't know when it will be implemented. So there's just too much to consider at this point. And I like to think about from a worst case scenario perspective. So I would prepare those of us that do own rental properties. And I own over 300 rental properties here in Jacksonville, so I'm right there with you. I'm expecting a temporary loss of rental income over the immediate short run. Call that a couple of months or so is my best guess at the moment.
Okay, so there's a couple questions that are directly related to this piece of it, right? So I'm going to go through that now. Zach Correa asks, what is the plan when tenants can't work and cannot make rent payments? It sounds like you kind of answered that. We really don't know how long this is going to happen. I think everybody can understand that. But you and I have spoken that you guys are probably going to take a viewpoint of a holistic portfolio and give recommendations for everyone. Absolutely.
And Zach, great to hear from you. We are going to make sure we communicate that to you on your specific property very, very well. It's the most important thing for us is communicate with our clients individually. And so we're going to have a plan in place for each client. I think each situation for a resident is different. It's hard to make a broad statement on what we can do, but I think, but I know that we're going to be able to give you that guidance. And something else that we're doing specifically just for JWB clients that are being affected is we're going to have a specific call. It's going to be next Monday at 11 a.m. And Zach, you're going to be invited to that call. We're going to get a little bit more granular on how we're going to handle specific issues just for those clients that have those types of questions. So between those two things, you're going to be taken care of.
Awesome. And Lenore Beccavia also had a kind of similar. Can we as owners offer any resident that is hurt by the situation a rent discount for the coming month or a few days delay in rent? Obviously, we don't want to hurt JWB on the management fee side of it. And I just want to interject a little bit that as I'm hearing these questions come in and I'm thinking about it, there has to be an advantage to what your viewpoint is across the market, right? Like I'm sure that you're not really going to give concrete answers to all of this, but I do have to assume that you're going to be getting a much bigger view than somebody that just owns a property by themselves or like a small property management company or something like that, right?
Oh, absolutely. I mean, we manage over 3,300 homes. So that's 3,300 data points that we have to make the best decision to guide a rental property owner. And I just think Lenore's question is so reflective of our clients and the reason that I love what I do. It's working with folks that are thinking of others in this time. not necessarily just about maximizing their return on investment. I think that's so selfless. You know, we have had that question by a few clients already. What can I do to help in this situation? What can I do to help my resident? You know, I think we're going to have a very specific conversation with you on what the best thing to do is for your resident. You know, I would love to help those who are in need right now. That doesn't mean that I think all clients should just assume that they're not going to get any rent for these next couple of months. I hope that's not the issue, but on a case-by-case scenario, I think that's one thing that we can certainly consider, and we're going to be there to guide you. Either on that call next Monday at 11, Lenore, we'll get that link out to you so you can join that client-only call, and as well with your service teammate who's going to be communicating with you and giving you a personal phone call.
Okay, great. I think now we can move on into more of the home prices part of it. Although Lee Bishop has a comment here. I'm not sure if this is a question or a comment, and I'm not really sure where it fits. And then Everett Shapiro also has a question that is going to be on the private lending and I think what home prices are going to do. So we'll move on to that once you explain that piece. But Lee put, I would think that the coronavirus is going to keep the people from going to see rentals or visit JWB to interview rentals. Therefore, I think houses that are not rented are going to be not rented until the virus is in the tail end.
So that's a common question, and I wouldn't necessarily agree. So the way that people actually rent homes from JWB is by self-showings, by definition. In fact, I was just recording a video to help all of our potential residents out there know that, you know, in a time like this where we're trying to avoid social gatherings, and, you know, some people are accustomed to going meeting a realtor at a property. For a long time now, JWB has been doing this through self-assisted, self-guided showings. And so if people are scared to be interacting with other folks, they don't have to have that fear. So we are continuing to rent out homes. I don't expect that to just completely dry up based on what I know right now. And based on the fact that people are still going out and looking at homes as we speak here. I don't have that fear, Lee. No, if things should change and everybody is not allowed to leave their house, then that would be more of a fear, but I don't think we're there yet. And if we get there, I'll certainly, you know, share that with you. And my goal is always just to give you what I expect, and it's not always going to be rosy. And so if it got to the point where people are not allowed to leave their house, you're right. I don't see people going and renting houses. And I think there would be, you know, a serious downturn in the number of homes that we would rent for that time period. But again, it would be temporary and people still would move afterwards. So I would expect a sharp rebound after that.
Sure. And I would imagine that whatever is, if your lease is coming up right now, you still have to make a decision in the next month. And the fact that you're set up to do all this stuff virtually is an advantage over anybody else that isn't set up to do it virtually, is kind of what you're saying, right?
Exactly. I mean, the process of renting a home through JWB is so much more efficient, technologically savvy, and able to do on an individual basis than most other property management companies that you've ever heard of or done business with. So we are at an advantage to that point. You know, the other thing to consider is that some people are not just able to just extend their lease if they're in like an apartment complex or something like that, right? I mean, we're working with our residents to renew them as much as we can because we believe in the value of long-term tenants, but not everybody thinks that way. And apartment complexes are notorious for, you know, leasing that out and not allowing people to extend if they didn't let them know 60 or 90 days in advance. And so there will be a big part of the population that does need to find a place to rent, you know? So I'm optimistic of finding other ways to be able to rent, even in the worst case scenario that, you know, that Lee kind of mentioned. And I clearly don't have any plans in place for you right now, but your point is that there's going to be a need to find a place to live. And like most people are doing right now, we're figuring out solutions that are technology based to allow people to do that. You know, and the other thing to think about is I'm trying to be very forthright that I do expect there to be a temporary dip in rental income. But I think it's important, you know, that sounds scary to people, but I think it's important to think about what the real dollars are there, right? The fact that it's temporary and the fact that the real dollars compared to what the real dollars lost in other investments is, I think, a really tangible point. I mean, our average rent for a JWB rental property is about $1,200. And so I don't expect that this temporary loss of income would be 3 months based on what I know right now, but let's just say that that's what that is. I mean, we're talking about a $3,600 loss right now, right? And that's really what it is. I mean, if your money was in the stock market today and you had $100,000 on February 19th, you would have lost $32,000 there. So, people keep coming back to this asset class because it's consistent. In a time of extreme volatility, I think our floor for rental properties is much, much higher than what else is out there. And I hope people get confidence in that, right? We're not talking about this asset as something that is losing, value on paper overnight, right? We're talking about a momentary dip of rental income is how I'm thinking about my own investments at the moment.
Yeah, you're losing cash flow revenue, not the money that you invested in, because that value is still there long term, and it's not going to take, a market's going to come back, but it's going to take months and months and months to come back. While if that $3,600 had you, in a weird position, once this finishes and you sell your house, it's still going to be worth what your house was worth, and you're still going to get all that money out plus the appreciation and stuff like that, right?
Well, we're gonna get to home prices in a second, but yeah, I mean that's largely how I think. And the other thing is that in all of your expectations for all of our JWB clients, if you look in the original evaluations, there's always an expectation for maintenance costs and for vacancy costs. It's built in, right? So it may be a little bit more because of what we're all experiencing right now, but it in no way takes this investment, takes away from what the quality of the investment is over the long haul. It's a momentary dip in a worst case scenario, in my opinion.
Great. So Lee's got a quick follow-up question. I think you can answer with a yes, no, and then we're going to move into home prices because there's questions about more interest rates and stuff like that. And I think that's going to go with the home price section. Leah said, thank you for asking my question. When I came for a visit, you said that you're interviewing in groups and not individually. Is this the same?
Group lease signings is what Lee is talking about. Yeah, prior to the move to go remote, we do group lease signings so we can make sure we set the right expectations for all those residents that are signing leases. We are, of course, not doing group lease signings now. We have a process for just an individual conversation with that person who's signing the lease and setting those expectations. We do that remotely. So we are absolutely able to move people in. It's a slightly different process based on the need to do it virtual now.
Yeah. So do you want to go into your, I know that we're coming up on 1 o'clock, Greg. Do you have a hard stop at 1? Can you go a little bit longer?
Yeah, I can go a little bit longer.
Okay, so let's go a little bit long. We still have a ton of people on, right? Like we still have 22 people on the Zoom call, and we have 14 people on the Facebook Live. So I think it's worth it to be putting that value out, right? So I guess give me your perspective on home prices, and then I'm going to ask the refinance and the interest rate questions that are coming up.
Yep. So let's talk about home prices. So if you're an investor for JWB, this might sound a little bit repetitive, but the reason you're investing is for the long haul. You are not an investor who is buying today and looking to sell tomorrow, right? You're in it for the long haul. Usually a 10-year hold is what I recommend, and a minimum of 5-year hold is what our clients sign up for. So this is a temporary situation. I keep saying it because I want you to keep that perspective. So I don't expect that the values of home prices in Jacksonville to fall at all because of this. Because this is a temporary situation, and there's strong underlying metrics and fundamentals for the real estate market here in Jacksonville. We talk a lot about months of inventory, which basically measures how many homes are sold compared to how many homes are on the market. And under 6 months of inventory is a sign that you would expect higher than normal home price appreciation. We've been in the 2s and 3s for a long time now. We haven't even reached 6 since I think 2013. So the underlying supply and demand of the real estate market for housing prices in Jacksonville is strong. Now, again, this is a temporary curveball that has been thrown, but I don't expect house prices to drop. I don't. I think you can take it even a little bit farther though, right? I do expect us to be in a recession, as I mentioned, and the common thought is that recessions and home prices are related, that if you have a recession, you should expect a real estate crash. Why do you think that is, Pablo?
Because the last recession that we had was an outlier that crashed the real estate market.
Absolutely. Absolutely. That was different than every other recession that we've had. And so what you saw is because real estate and the lending practices and a few other things caused the recession in 2008, real estate took the brunt of it, right? But if you look back over prior recessions, and we've done the research, actually, we call this the recession myth, the myth that real estate prices and crashes happen when recessions happen. I think that's a myth. So if you look back to the four previous recessions from 1980, there was one, 1981, there was one, 1990, and 2001, or the four previous recessions. Most people are absolutely shocked here. Are we back in the game?
We're back, baby.
We're back in the game. For the four previous recessions, most people are absolutely shocked to learn that home prices did not go down in average, right? They actually, on average, appreciated at a rate of 4.7%. And I'm quoting Jacksonville data. But even across the country, they appreciated. So that's four previous recessions. So I want people to understand that, yes, I believe we are going into a recession, but no, I don't think that's going to have a drop in your home prices, right? The other thing to keep in mind here is it's this long-term hold mentality. I even feel more strongly that your long-term home price appreciation is not going to be affected. Another stat that absolutely shocks people when we show them the data is that from 2001 to 2019, your long-term appreciation rate in Jacksonville on average per year has been over 4%. That is directly related. That is very similar to what the long-term appreciation rate has been in Jacksonville since 1991. So a long time we've appreciated at 4.3%. In 2001 to 2019, we had the Great Recession that happened in the middle, where home prices went up before the Great Recession and they went down. And would you believe that we're right there, right above 4%, even in what I have expected to be the most volatile real estate market that I will probably ever see. So again, for those that are JWB clients, for those who are thinking about investing in rental properties, I don't think this is going to have one change to the long-term appreciation rate of your asset. If you invest in Jacksonville, you're going to earn about 4.3% average appreciation year over year, assuming you stay in for a real estate cycle, which is a 10 to 20 year period. So very confident on housing prices. I don't think this is going to have an effect.
Okay. So that answers Doug's question that we had originally answered. We came all the way full loop, right?
We got you, Doug.
We are here to serve. Okay. Excellent. So that being said, what about, we got a couple of questions here in the queue. Specifically, Everett Shapiro is asking, with the Fed lowering the rate to 0, does that affect your private lending program?
That's a great question. So with the Fed lowering the rate to 0, what effect does it have on private lending? I think even a bigger question is what would affect private lending rates, right? Simple answer, Everett, no, it has no effect. Again, consistency is one reason why people go to private lending. Private lending is our ability, is basically the lender, excuse me, we should describe what private lending is for those who don't know. So private lending is where our clients basically act like a bank to JWB or to another real estate developer, and they lend money on our real estate projects. The biggest question and the biggest factor into your overall interest rate and your return on your investment in a private lending investment is just simply the strength of the borrower, right? So JWB is very strong. So I don't have any concerns about private lending or that interest rate at all. It has no effect on what the Fed funds rate is.
Excellent. Excellent. That's good to hear. One Key Nelson is asking, do you think it's a good time to refi some rental properties that are free and clear to get cash out?
That's a really interesting question because when I heard that the Fed funds rate was dropping, as a real estate investor, my first thought is, okay, well, it's not my first thought, let me say, but if I'm looking to maximize my rental property investments, I'm thinking, okay, time to refinance. Rates should be dropping. It's not exactly the way that it works. There generally is a lag, so they're not directly correlated. We haven't actually seen a drop in interest rates yet. So the Fed funds rate has dropped to basically 0%. But that does not directly correlate to mortgages yet. Usually there's a little bit of a lag. And so my feeling is that you will see rates come down. I think it makes sense to most of us, but it hasn't happened yet. So if you're thinking about refinancing, maybe I'd say hold off for a few weeks or a month, or see how this thing kind of plays out. But yeah, actually right now, interest rates are holding steady. I think we estimated about 4.75% is the rate that our investors should be able to get, which is a historically low rate anyways. But we haven't seen that drop since the announcement.
Okay, great. Taking consideration, So David Marino's asking, taking in consideration the impact on the economy, do you think that banks and lenders are going to offer a grace period on mortgage payments?
It's another really great question. I've been doing a lot of reading, and I think that there is going to be something that is done. I just don't know what it is. I don't know how they're going to get the benefit to the people that need it the most. I just don't know. But I think there will definitely be something that will help both those who pay a mortgage and those who pay rent. And not only will the government help banks provide that assistance, I think banks in general will also make an independent decision to help as well. So I do think assistance is coming in one way, shape, or form.
Yeah, that makes a lot of sense. We have a question from Tim Horvath that I think is interesting. With the economic slowdown coming, are you reconsidering your commercial investments, so non-residential, or are you still bullish on commercial investments as well?
It's a really good question. Tim, it's like you were in my business planning session yesterday with my business partners, and we had a really healthy discussion on that. Again, it comes back to the fact that, well, let me start over. So when we were in 2008 and we were making decisions as a business, one of the first questions we asked ourselves is, do we believe that real estate is going to recover in the long haul? And we did. We made decisions to continue to hire folks, to continue to make investments, to continue to buy. In 2008, when our financial picture in 2008 as a fledgling company run by a couple of 20-something that didn't have any money at that time, it was a lot less secure, right? But we made that decision because we believed in the long-term health of the real estate market, specifically in Jacksonville and across the country. And when you have that belief, I think you're able to make very wise decisions that pay off over time. Now, comparing that to what we're seeing right now, this is so much more temporary than what I see us having been through in 2008. The recovery is going to be a lot quicker, not what we want, but it's going to be a lot quicker. So to get to your question, how does this affect our investments in downtown? It hasn't changed it. We're moving forward. You're actually going to be hearing other news of other investments that we're working on. Haven't been able to talk about them yet, but you're going to continue to see some positive news based on what I know right now. And so we are not pulling back. We feel really bullish on downtown. And we think that because this is temporary, we will recover. There's pent up demand, and we're really bullish on downtown long-term as well. So simple answer is no change. We're moving forward with the things that you guys have heard about in the news, and you may hear a few others that we've been working on behind the scenes.
Awesome. I just want to take a moment right now. Right now we have 21 people on the Zoom call. We've got 14 people on the live call. This is great. These questions are fantastic. Gregg, I applaud you for just being earnest and answering everything. But I just want to point out the fact that we're no longer playing the episodes live and then going to Q&A. We're playing the episodes. We're posting them in our YouTube. We're posting them ahead of time on the Facebook group. And then you can just join us for Q&A. So it can only be a half an hour. You don't have to watch a show that you didn't really want to watch or do want to watch ahead of time. You can do that on your own schedule. But we're going to be doing this weekly, right? So as this coronavirus thing keeps on evolving, Gregg will be showing face. You can ask whatever you want. As you can tell, he is completely transparent. I have a couple of comments here that I want to read out, and I got a couple more questions to ask you. But we had an anonymous attendee. That's literally what it writes here. Put just a comment. Thank you for being so transparent. It's refreshing, man. And I feel like I wanted to read that just so that you get that positive feedback, because I do think it's vulnerable for a business owner to get out here in such uncertainty. So you deserve that praise. And then Zach Correa, wrote, Gregg, I know you and your staff is making decisions with the best intentions in mind for JWB and your clients and your residences. Take care of yourself, your family, your loved ones, and your colleagues. Thanks for everything you do, and hang in there. So I just wanted to give some love back to the people that are giving love and let you feel that too, man, because I know that these are stressful times with so much on your shoulders.
Honestly, everybody, I just want you to know that really matters. Really makes me feel the love that we have in our community, and I appreciate that. There's a lot of messages that we as leaders needed to make sure that we share with our clients, with those who are thinking about making a decision to be a client with our team, with our vendors, with our residents. And we're really trying hard to be there, even if we don't know the answers. And so, yeah, I think this outlet, this 12:30 on Thursdays, hopefully everybody can mark their calendars and be here, because this is something that we're going to do routinely. And, you know, for a topic like this, there couldn't be a better outlet to be able to share with our community. So, and now it'll normally be a half hour long. So hopefully it fits more in with everybody's schedule. I know that was a little bit of the feedback. The hour that we were doing ahead of time was really hard. So we're trying to learn and evolve. And so we hope that you guys will be here every Thursday at 12:30.
Okay. We got a couple more questions. You ready?
Wait.
Lee Bishop asked again, if we see tenants living paycheck to paycheck, the forced layoffs for middle income people are living in our homes are going to hurt them in paying rents. Does JWB have a policy that will help these people out?
And Lee, you know, I really want you to jump on the call on Monday at 11 as well. Lee is a great client. It was just in our office for a client tour the other week. So, so do we have a policy? I'll tell you the truth. We wrote out one on Wednesday, and since then, some things have changed. Some of the news has changed. And so I don't even know if that is going to be the policy that we roll out with. Things are changing so much. We are making plans to do right by your investments and your residents and trying to make the best decision for everybody. Things are changing so fast. So we're going to talk about what we're going to do specifically for your residents on Monday. I know what our overall plan is on Wednesday, but I also know that we received some news that might alter it a little bit just since then. So I just think the best thing that we can do is just communicate and over communicate in a time like this. So yeah, Monday at 11, all of the clients that are on this call, you guys are going to get a special invitation to be there. Monday at 11, we're going to get a little bit more granular on exactly what we think the best thing to do is at this point in time. And then that constant communication with your service team member, your portfolio manager, as we're known here at JWB, is going to be a great ally for you as we do right by you.
Awesome. He said he's going to be there, and he said it's okay and making sure tenants are taken care of, brother, is what he wrote. So he's a great guy.
And that's the feel that we get from most of our clients. It's a selfless thing. They're thinking about others in this time. I love working with folks like Lee. He's awesome.
So Eddie Harris has a question. Is JWB involved when after 8 or 10 years, you are looking to sell off your rentals? And then he wrote, be safe and you're awesome.
Thanks guys. Thanks for love. Yes. So for those folks who are looking to sell right after maybe the 10-year mark, or I think he said the 8-year mark, right? Yes, we're absolutely involved. We're involved all along the way. We're guiding you to the time when we feel like you can best maximize your returns and sell. So I don't want people to feel like we're just a property manager and we just show up at the end and help you sell. I mean, we're really an advisor all the way throughout the process. And then at that 10-year mark, let's say that's the right time for you to sell. We are going to facilitate that process for you. Now, your best way to maximize your returns is not through JWB, because JWB focuses on investors, and your best way to sell and maximize your returns is to sell to a retail homeowner, somebody who wants to live in the home. And that is not our niche. That's not who we are. But we have relationships with real estate agents that we absolutely trust. We've done a tremendous amount of business with them. They have listed my personal houses and our houses that we have sold on the open retail market in the past. And that's who we're going to put you in touch with. And it's a very seamless introduction and very much on the same page. So we'll help, we'll facilitate when the time is right, and you'll be in good hands.
Excellent. Excellent. And now we have Dom, who I don't think was on earlier when you were just kind of talking about the adjustments that you made. Dom Felix is asking, is it business as usual for JWB? Let me get the right thing. I kind of thought that I had this memorized and I just messed up.
Is that Dom? Gonzalo and Dom? Good to hear from you.
Yeah, Gonzalo and Dom are hanging out with you here, man. Oh man, where is it? Okay. Is JWB conducting business as usual through all its companies? And also, Melissa Gillespie wanted to say, just for the people out there, maybe we can just talk about what is JWB's number one priority in the business during this time. I feel like those kind of go hand in hand. Yeah.
I mean, our number one priority is to perform for our owners to the same high standards that we've always maintained. I mean, and that's our mantra to our entire team, and everybody's really rallying around it. I know Melissa is Melissa runs our property management company and such an incredible dynamic leader. And on the group, on the Facebook groups, there was a comment, there was a post, and we were talking about the change to go remote. And Melissa shared that we had, I believe, 98% of, I think it was phone calls answered, and, rent collection. I'm not sure exactly what the number was, but I mean, we are committed to performing at what those standards are. So that's what everybody should expect. And at the same time, guys, we're dealing with a lot of uncertainty. And so there's going to be some disruption in the very short run, but that's our standard. Our standard's our standard. We're going to get there.
Can you give, so Dom and Gonzalo, they don't have 85 people, right? But they got like 12, 15 people in that office. Can you give them some advice on kind of how you guys thought about it when you were handling the team and going remote and stuff like that? I think that'd be real useful for them.
Yeah. I'll talk to you about, I feel like the first time that we had both a lot of information, we understood the full impact, and we also had some time to kind of digest this, was yesterday. Now we meet every Wednesday as the 4 leaders of our company. We meet every Wednesday. That's what we've done since pretty much the beginning of time. The previous Wednesday was about planning. It was, in the event that we do need to go remote, how do we roll this out for the team? How do we continue to perform to the standards for our clients? And we brought all of our managers and supervisors in that meeting that previous Wednesday. From that Wednesday to this Wednesday, the whole world has changed. So what did we do last Wednesday? I think it'd be really helpful to kind of share with you what we did. The 4 of us met together, and we had really a mini business planning session. In our business plans, we all are responsible for different parts of the business. We talk about production. We talk about inventory levels. We talk about, how many houses are we going to build? How many houses are we going to buy? How many houses are we going to rent? What type of rent collection are we going to be able to achieve? All this. So we did all of those things as the 4-headed monster that we are. And then we go to our cash flow. We go to our cash flow. Something that I hope others on this group can kind of learn from is our commitment to cash flow. And we plan out our cash flow to the dollar for a full year in advance. And if I can think about one of the things that I wish I would have learned as an early entrepreneur, and to what I know now, is that commitment to cash flow. Not only is it incredibly important, but it helps me have peace of mind to run an organization like this in the face of such uncertainty. Right? I think a lot of entrepreneurs and owners are scared right now when their employees are asking them, what are we going to do? And that's not how I feel. And that's not how my business partners feel. And the reason that we don't feel that is because we go through this type of a business planning session, right? Normally we do it once a year and we roll out that year. This is the time when we needed to do an extra one. So we went through and we planned out and we answered all of those questions across all the different departments: acquisitions, construction, property management, every part of this. And we said, what are the impacts? Let's be incredibly conservative. And where is our cash flow on a monthly basis for 1 year out? And let's make sure that meets our standards. And so that's what we have done. And we have a commitment to doing that every single week, not just a time like this. We are just absolutely maniacal when it comes to cash flow management in our business. And so, so that gives me a lot of the confidence to know how we're going to be able to support our team in a time like this. We're actually going to be doing a call with our team tomorrow, and in the morning, specifically talking about questions that our team may have, because people are worried and you need to be out there communicating. And, the folks at JWB don't have anything to worry about. There are not going to be layoffs at JWB. So.
That's excellent, man. That's really good. I went through the 2008 recession also in the construction industry. I've been in companies that are less stable, right? To be quite frank, I think it is a very telling sign of your leadership when in moments of crisis, do they show up more or do they get more clandestine, right? And I just want to applaud you. We don't have any more questions in queue, man, but I really do want to applaud you for the way that you are committed to being transparent. It hasn't gone down one iota from when things were good to right now that things are really so, quite frankly, daunting. and that not just that, but you're also stepping up even more, man. So I just think it's refreshing to watch. I enjoy being a fly on this wall and adding in any way I can, man. So kudos to you and your team.
Well, thanks, Pablo. You're a big part of this. I mean, this platform that we have right now is a blessing. It's a blessing in a time like this. I mean, you know, I feel really good about what we can do within JWB. I know that there are others that are hurting. So I would just encourage everybody to, make sure that you're okay, and then think a little bit beyond that and try to take care of those who are less fortunate than we are.
All right. I think we went a little bit over than the half an hour we had planned, but I think it was worthwhile. And I really thank you, everybody that showed up to this, right? We had like 35, 40 people on the call at a time. Right now, we still have like 33 people. I want to do more of this on Thursdays. We love getting this interaction. We love being able to do this, and it only helps aggregate value across the community. So if there's anybody out there that wants to be on the Not Your Average Investor show because you have some kind of like great advice to give, or you have some kind of unique perspective, reach out to me. I mean, we're always workshopping who the next guest is and who we're going to profile, but this is supposed to be a stage that shows the community, our network around us, the value of our clients, and the leadership of JWB. So I just want to encourage participation here going forward, and reach out to me, right? I'm very available via Facebook or the group or however you want to do it. And that's it. Greg, you wanna sign us off? Oh, I think Greg froze, so it's on me. See you, everybody. Thank you so much for being on. We will be on next week, same time, same channel. And in the meantime, reach out to us on the group, and give us some feedback on what you think of the episodes. I'd love to hear how we can do that better, and the short form videos and how we're putting it on social media. If you have any feedback on that stuff, we are wrapping up the first installment of that and going into the next one next quarter. So this is the time to change it. So I'd love to hear how it could be more valuable to you. I hope everybody is mentally stable, healthy, and happy, and spend time with your family and growing.